Colgate is all set to bottom out while Smile is just growing bigger and better. A global leader in dental care with a range of toothpastes, toothbrushes and dental gel, Palmolive is into personal care, face care, shower gels and liquid hand washes. Colgate is known for its brand building and innovation and massive investments on a continuous basis therein. A strong shareholding pattern with almost 51% held by the MNC parent. FPIs hold 18%, mutual funds 2.9%, insurance companies hold 5.6%, balance held by others. A strong and stable shareholding pattern. Colgate's dividend policy for the last 6 years has been quite impressive. Of its profits, almost the entire thing has been distributed as dividend on an aggregate basis, giving a payout ratio of almost 100% at a median level. Only impact is the massive distribution of dividend has left net worth with minimal additions on an ongoing basis. The latest market cap of Colgate is around 40,000 crores. Against its latest TTM profit of around 1069 crores, it gets a PE multiple of around 37, which is at a discount of more than 10% to its median PE multiple of 41.7 over a period of 7 years. Incidentally, this PE is even below the sectoral PE of 39.4, and that makes Colgate a candidate for bottoming out sooner than expected. Moving with FMCG NIFTY for quite some time, it is in August 2021 that it developed divergence and moved southwards till December, when it started sideways movement with consolidation, and that is the period the talk of bottoming out gets more attention. The consolidation and sideways movement, when seen from the perspective of Fibonacci retracement, we find the consolidation level is closer to 23.6% Fibonacci of 1481. 2 times in the recent past, the share has touched this level and failed. That was in end December 2021 and early January 2022. Because of these 2 failed attempts, there is every likelihood of further attempts which might lead to successful crossover and a movement upwards. The positive movement of the share price is quite evident inside the Bollinger Band when it crosses the midpoint of 20 EMA, and it was all set to cross 50 EMA, not yet, but a decisive crossover of 50 will convey that the upward trend will start only thereafter. I am Vittal Prabhu, bringing you the weekly video on Stock Learning Simplified. Hope you will find the video interesting and useful. Colgate has remained the market leader, but the matter of concern is its market share has over time reduced because of competition from existing big players and also the entry of natural toothpastes. All said, with its strength of research and innovation, Colgate continues to be in the forefront with almost half of the market of the country with it. Colgate's market share has come down over a period of years. Similarly, its revenue has grown very nominally by around 4.5% over a period of 5 years. This is a matter of concern for a company which talks of a national market and national leadership. Its profitability and total assets have moved in the normal pace, but the concern in respect of net worth, over a period of 5 years, company has added only 100 crores to its existing net worth of 1000 crores. That is a concern. While market cap has kept pace with the company's profitability and moved with the double-digit growth. Combined with its nominal growth of revenue, concern is in respect of EBITDA percentage. Revenue on a TTM basis is 5082 crores as of December. Its EBITDA has moved but at a slower pace. EBITDA percentage, which was at 31.2% in 31st March, has fallen on a TTM basis by December to 30.7%. If we take these 3 quarters into account, the additional revenue generated during this period is 241, which shows a revenue growth of 6.8%, while the EBITDA is incrementally just 48 crores, which works out to an EBITDA percentage on incremental sale of just 20%. This fall in the margin has been reflected in the TTM EBITDA percentage, falling from 31.2% to 30.7%. Nominal growth in revenue and a fall in EBITDA is a matter of concern. Although input cost increase has been managed with reduction in the advertisement expenses partially, long term the company has issues of margin protection. Colgate has remained a market player with a big advantage, and its operational cash flow has remained quite substantial and growing year on year. Nominal working capital changes, although there is substantial addition from this front in the recent 9 months, and dividend quite big, growing year on year, and that catches attention under the rich dividend payout strategy of the company. And after a big dividend payment, operational surplus that remains has been falling, going to negative territory during the previous year. And along with the dividend, a negative feature that comes out is decreasing amount of investment in fixed assets. Capex has been falling from 2018, and there appears to be an inverse relationship between dividend and investment in fixed assets, which is not in favor of a company which believes in research, innovation and massive investment for future. Price action data for the last 3 months throws up a mixed bag of average price, quantity, delivery percentage and quantity per trade. Price has marginally moved from 1448 to 1457, a plus but a feeble plus, but it is volume that is playing. 63 crores has fallen substantially to 55, means volume support is not there for the current movement of prices. Investment interest has been there as the delivery percentage has consistently moved on all averages, and what is very clear is in terms of order size, it has moved from 18.8 to 23, but till the last day it is a continuous fall, therefore it is more of a negative than a positive. From the price action point, it is quite clear bottoming out might be possible, but there should be a sizable increase in the volume involved. Colgate has been the biggest player with superiority in technology, research and market edge. Share price movement has been quite promising, and price action is suggesting a breakout possible with bottoming out. But a look at the cash flow, quite weak revenue CAGR, net worth degrowth due to high dividend, slowdown of capex after 2018, and in the recent quarters, strong margin pressures resulting in reduction in the EBITDA of the company. On the whole, based on its experience and technical superiority and the movement of candles, one can conclude that the share is likely to bottom out sooner than expected. Hope this presentation on Colgate highlighting its market share, product superiority and margin pressure came up to your expectations. You can access similar rich content oriented videos at our info card on Stock Learning Simplified. We look forward to your likes, shares and comments. If you are visiting the channel for the first time, may please subscribe and press the bell icon for timely intimation on our forthcoming videos. Thank you so much for your interest, support and valuable time. This video is for purposes of information, education and awareness only. This is not meant to be a solicitation or recommendation to buy, sell or hold securities. Please seek the advice of a competent professional before taking action of any kind.